to the Rogue Agronomist Podcast with Kyle from Stall Agronomy. You never know what I may say or who will be on, but you know it'll be real, because that's me.
Hello, everybody, and welcome back to the podcast. It's Kyle from Stall Agronomy, and for the first time, we're going to try the video thing. So I'm going to try doing recording and uploading this also to YouTube. So we'll see how this all works. And I'm on the other screen, and if you're on YouTube, you can see me right here. So it's kind of an interesting way to do it. And now I actually have to look good and not be in my pajamas when I do this, which that might be a little bit of a violation on YouTube. So let's talk about today's topic. Let's talk about the 80s farming crisis and how does that relate to today. So obviously, if you're not familiar, the 80s farming crisis kind of started in the 70s. So in the 70s, we had Earl Butz tell everybody to plant fence row to fence row. He was the ag secretary when we had a grain deal with Russia because the USSR needed our grain. And so we were selling grain to Russia, along with getting text messages. But we were selling grain to Russia, and we basically needed that grain. And so farmers were, purchasing equipment. We were going out and getting loans, and land values started to rapidly increase. And as land values started going up, we also saw equipment values go up. We saw, grain prices were great. Everything was really rolling for the ag community in the 70s. And to say banking wanted to get in on that is might be even an understatement. So the banking industry as a whole really wanted to get in on the farm boom of the 70s. So one thing you have to understand with how we do taxes in agriculture and how we do loans is I was listening to another podcast the other day talking about how most businesses use cost basis for analysis of what your stuff is worth. So if I went out and bought a truck for $50,000, that's how much we paid for that truck. That's what it's worth. What we do in agriculture may be a little different, and we use we're not using cost basis, we're using market value. So when let's say you own an acre of land and you paid, at that time, let's say we paid $1,500 an acre for it. 2 years later, it's worth $3,000 an acre. To use $3,000 acre worth of capital, you would run market analysis or market valuation for that acre. So I'm not a banker. I'm not going to propose that I know everything about this, but this is kind of the bare minimum of trying to understand some of this. So what happened was banks were revaluing all these assets. You're worth now, twice what you were a couple of years ago, and let's get you a loan to go out and buy more land. And even though the land's more expensive, you're worth more, so you can go buy more land. So people were buying land. We're buying equipment. Market prices are going great. And then in, I think it was 79 or 80, Russia decides to invade Afghanistan, and we had a grain embargo. And so essentially we stopped selling grain to Russia. So market prices started going down. We got a glut of grain. Banks started to realize, and here's the scary thing is kind of things that are happening in the home market or housing market right now is banks started to realize, holy crap, this guy's got a loan for $100,000. He is now, the assets that he has for that $100,000 are now worth $50,000. And we could go belly up on this. And his interest rate, which is the other part of the 70s, was as inflation grew, they tried to combat that, which is what we're seeing now with inflation, or they combated inflation with rising the interest rate. So the interest rate eventually got to 21% in the middle of the 80s. So not only are you worth less, now you're paying a higher interest rate, and they're refinancing you to try to help you out, so maybe. And as you refinance, the interest rate goes up because now you can't get money. You're having crop issues. This is somewhat pre-crop insurance. They didn't have quite the insurance we had now. So on top of that, you have some dry years in there. You also have grain value is worth less, and equipment's worth less, and animals are worth less. And essentially, it just all kind of came crashing down because you were worth less, and then now you're paying interest, and the interest you have on all this extra stuff that you bought is at a higher rate, and basically you can't even pay the interest, and that's it. That's the end of that. And there's a lot of people that restructured towards the middle of the 80s, but by like 85 or 86, it really hit home, and we had farm sales, a lot of things going on. So all these things kind of culminated, right? So we had high interest rates, we had elevated land and equipment values, we had somewhat elevated grain prices due to Russia being basically cut off from exports. And all that started happening all at once, and nobody was prepared for it. And it just, and at that time, I can tell you, I mean, you see it sometime even now where people are looking to experts to help them make decisions and take more loans out and buy land. And those same experts, 3-4 years down the road, were like, holy crap, you owe us a lot of money and you don't have the collateral to pay this. It's not, we wrote a loan for $200,000. Now it's worth $100,000. And if we foreclosed on you, we lose $100,000 essentially. So major risk for the banks. And that's what started happening. So fast forward to 2019, right? We were at that time kind of saying that we kind of had maybe not the best of times in agriculture. We were talking about farm suicides. We were talking about bankruptcies in 18 and 19. And then the pandemic hit, and we went from, I don't know what the heck it was before the pandemic actually started happening, but I think we got down under $3 for a little bit for corn in 2020. And kind of as everything kind of started coming back online, we started getting back to work a little bit, which, yeah, obviously farmers, we never quit. But as everybody kind of got back to work, grain prices went up. So 2021, probably one of the best years we've ever had. I think 2021 on a financial basis was amazing. It was great. And for that matter, 2022, great yields here. And if you bought your inputs early, you actually had lower input prices and really good grain prices. 2022 was a great year. That also being said, we have to look at some of the things that have happened in the last couple of years. Inflation's been going nuts. We've been talking about inflation for the last probably almost 2 years now. And part of that is we had the student loan pause where people didn't have to pay their interest rate or pay their student loans, and they got capped at a 0% interest rate. And that's been going on for almost 3 years. So you got all these people that haven't had to pay on their student loans. They didn't have to, but they could have, and gotten 0% interest during that time. And I saw a statistic somewhere at 1.46%. It was a really, really low number. There's a couple different ones out there. So let's say even at 5%. 5% of people actually kept paying their loans and actually started paying them off. The other 95% of those people took that money and spent it on other things. So we have inflation from that. You have the payment protection plan or program, PPP. There was 2 rounds of that. They handed a bunch of money out to people like me and business owners and farmers and everybody. And essentially, as you kept your employees or your workforce the same, and I think the second round you had to show a loss in a certain quarter, here's money. And it was basically like 3 months of payroll. And, so we threw that money out there. And yeah, obviously some people abused it, but that money's out. You've also got, on top of that, they were sending checks out to people that made under certain dollar amounts. They forwarded along child tax credits and all these different things. We were just throwing money at people to not work and not travel and not do things during the pandemic. So all this money got thrown out. We've got people that had loans, but they didn't have to pay on them for 3 years, and now they've gotten accustomed to having a nicer car, or they're paying more for other things. And in the last year or so, they've kind of started living beyond their means. So that's happening in the private sector. Now in the ag sector, we've had equipment values just skyrocket. I mean, honestly, if you follow Machinery Pete on Twitter, anywhere, he's talking about records for farm equipment. I mean, the other day, somebody paid almost $200,000 for like a 30-year-old tractor. and it wasn't even that low of hours. And there was Corey Hilbo posted a thing, I want to say last winter, about I don't know what brand of trailer it was, but basically a grain trailer. I think it was an early 2000s model that sold for more than what we would pay for almost a new one a few years ago. And I looked at trucks a couple of years ago because we had to upgrade one, and a used truck was actually going more than a new truck, and they were adding market price adjustments on, and they had all these different things. So we're paying more for things, and I mean, John Deere's Starfire 6000 receivers, a new one from the dealer was $3,800, but you couldn't get one. They were going for $8 to $10,000 for a Starfire 1 receiver that you could pay $3,800 for at the dealer to get. And as all these things have happened, and farming's going well, we're getting money. If you need something right now, you got to pay for it. Parts have totally increased. I've looked at two things in the last year that I either bought previously or didn't buy, and then I had to go out and buy it, or I'm kind of revaluing things, and those have all doubled in value. And I wish I'm kicking myself on one thing that I didn't buy, and I'm not kicking myself on the other thing I did buy. We were all buying things, and as things went up, your value's gone up. So where we're at is we're starting to see those interest rates rise up. Obviously we're not at 1980s levels. We're not in the double digits on a lot of interest rates, but there's loans out there right now, 7-8%. There are elevated equipment values. Fertilizers went up. Now it's kind of come back to reality a little bit, but it's recently started going back up with this whole Ukraine situation. There's so many different things going on that we're starting to see people kind of pull back on what they're spending. I think with inflation, we're starting to see some of that happen. We're starting to see the resumption of these student loan payments are going to happen sometime in the next couple months. So you're starting to see people kind of tighten their belts a little bit in just the rest of the country. In ag, we are still seeing these elevated values, and we're still seeing some volatility in the markets. And farmland, I want to say like Iowa, it seems like every time you look at a farm sale in Iowa that we set a new record for farmland values, and we've got all this going on. It's scary to kind of compare the two things. Obviously we don't have some of the same things we had in the 70s, and some of the things that are going on now, we have a little bit better protections on kind of how things happen and how banks handle the loan process, and that it's better, but it's not a lot better. And I think as we see these equipment values continue to stay high, you see land values stay high, we're kind of setting ourselves up for a correction. And the thing that is scary to me is, I put out a video on TikTok yesterday talking about the nutrient levels that soil testing labs are seeing is fairly concerning. We've had, I want to say in the last year I saw where the soil testing labs were basically surveyed, and they submitted how many of their samples were below a critical level. And I think it's kind of debatable state to state, whatever it is, on what a critical level of some fertilizers are. But P and K in Wisconsin, potassium were 80% below a critical level according to the state. And on the phosphorus side, we're in that 50 to 60% range. So 50% of our acres have been getting less and less fertilizer as yields have gone up, or the same amount of fertilizer as yields have gone up in the last several years. So essentially, we're mining that bank. We're looking at microbials and biologicals that will help us mine it even more. And I think we're taking from the bank on a lot of these acres. We've gotten to where we can't cut a whole lot more. And then we're looking at products to kind of save us. So the scary thing is, there's certain biologicals, and there's all these different things. Let's say our lowest stave on the barrel. We always talk about the stave of the barrel approach. If phosphorus or potassium is the lowest stave on a barrel, essentially, if that's the lowest point on that, you can't fill it up anymore, and obviously your yield can't go any higher. So P and K are limiting us on yield, and we're putting on zinc. We're putting on fungicides, we're doing extra nitrogen, we're doing all these other things. We're putting money into this crop all the time to try to gain more yield. And here we are, we're basically mining the most limiting factor we have and then adding products to try to gain that yield. So it's a maddening cycle to kind of watch. And as we're paying more for equipment and we're upgrading and we're buying land and we're doing all these other things, we're paying more for inputs, I think we're really setting ourselves up for some little thing, one domino to fall somewhere to really make it crumble. And, you look at 08 and 9, you look at the housing crisis back then, and the thing that really crumbled that was, you had these investment banks that were basically selling products that were crap. They're talking about different loans and how they had mortgages, and people were basically just getting a mortgage for anything. And they were buying a house, and then they turn around and sell their house 2 years later. I mean, obviously, where we live here, right across the street, has sold 3 times in the last 2 years. And each time it's $50,000 more than what they paid for it the time before. That value of that house is going for double what we paid for our house during 2009 and 10 when the whole housing market crashed. And the guy that we bought it from actually was kind of belly up on the house because he paid more than what it was worth, and now it came back down. I think we're one step away from that. So maybe it's grain prices going down. Maybe it's, we have a bad year, or we have a really good year and we have a glut of grain, and so does Brazil and Argentina and all these other countries. Whatever it is, there's going to be one thing that just sets us off. And I really think a lot of you, just all of us in the industry, it's not really a pinpoint thing, but we need to be kind of prepared for something like that to happen. So are you extending yourself on something that, let's say your combine is 4 years old, and a brand new one is double what you paid for that combine 8 years ago, but it's just really shiny and it's going to help me. You kind of justify. I mean, I've done it too. I'm married, so I have to justify equipment purchases, but we justify it by it's going to gain us X yield, or it's going to get us this much efficiency, or cut our parts we have to put into it. That number could totally change in a couple of years. So let's say you justify that purchase by, you're going to save on parts. And a year from now, that combine is now worth 2/3 of what you paid for it, and parts have come down, and your yields aren't going up. And, just one little purchase could set off a very big roller coaster ride for a lot of farms. And I think we need to be smart on, expanding as far as taking on more land, renting or buying, upgrading equipment. It's one thing if you bought a tractor for $40,000, it is now worth $80,000, and you're going to go out and buy an $80,000 tractor or $100,000 tractor. If you're making these little upgrades and you're taking advantage of market value gaining, that's not a terrible thing. If you're basically trading in a combine to just because you always trade in a combine, and the extra value or extra cost you're going to have to deal with, you're not as worried about that. And that's where we're going to start running into concerns. And, land across the road goes for sale, and, land in your area goes for 10 grand, and, you got some investor that's in there for 15, and you buy it for 15 because it's right next door. You're not going to be upset about buying land right next door. And let's say 2 years from now, the land market crashes, stock market crashes, something happens, and now it's worth $7,500. And essentially your land you bought for double what it is, if you were to turn around and sell it because you're in dire straits or financial issues, and now it's worth half of what you paid for it. And that's kind of what happened in the housing industry, especially around here. We had people that would buy land, and in 2009, they were turning around and selling that land for 50% of the value of what they paid for it or less, because they had to get out of it and they needed the cash. And we had farmers go back and buy the land, and now they're selling it again, and they're basically being able to double dip on some of this. Good for them, whatever it is. But I think we need to be very, very careful about how we manage ourselves through the next year, the next 2 years, we're not making purchases. We're not making decisions based on the next 2 months. We're buying seed this fall. We're buying fertilizer for next year. We're putting on amendments and doing all these other things, and we're applying something that maybe we don't necessarily need on our crop. $20 can go a long way per acre in adding potassium or phosphorus, or $50 or whatever it is. There's all these times where we spend $20 on this per acre and $20 on that per acre and $30 on this, and I wouldn't farm without adding this, and because it's shown a benefit, and we just put it on every acre now. I always talk about we need to verify all these different things we try, and we even though we think that they're the best thing ever, we need to always be checking these things. And I'm pretty adamant about that with our guys, and I think we need to kind of ramp that back up and understand that, if I'm at 30 parts per million of potassium, I could add anything I want to that crop. Maybe it'll show a bigger return than we've ever seen on anybody else's ground. But if we would have added more potassium, we probably actually would have seen no advantage to yield on the product we added, and we also would have gained even more yield because that was that short of potassium. So I think we need to focus on what we have as far as value. Value what's in that land, value the fertilizer, value. We put almost no value to when we buy a farm or we rent a farm, what is in that ground. And we need to understand that that's just as important as anything else. And, just having the land isn't going to be the same deal. I mean, when you're looking at $600-700 potash, and you have to replace some of that, and if it's already short, we need to value that as well. So there's all these different things we need to pay attention to, but for the most part, I guess my biggest thing is be prepared that there could be something happening. I mean, there are people that, I don't want to be a doomsayer, and I'm not trying to make everybody feel like it's the end of the world or anything, but I honestly think that we have set ourselves up to be in a really precarious position if we go forward this way and continue this way. So that's where I'm at. I think we need to understand, we always talk about making sure we watch history and understand history so we don't repeat the same mistakes. Let's kind of watch some of that stuff and understand how things affect our bottom line. And I think I don't want everybody to tighten their belts to the point where they're not getting any yield, but you also need to kind of look at the future and understand that, while things look good, things could go the other way quickly. And that's what they said. I was watching a documentary on the 80s, and we'll end on this. They interviewed a lot of these people, and they said, well, what happened? Why did this happen to you? What went on? And the one woman that they were interviewing said, I guess we were just naive. We just thought everything was going to be continually going up forever. I thought the banker was my friend because he was always nice to me. It wasn't exactly that they were the worst people. And all the people that were giving them financial advice were telling them to buy more things. I would trust that we should maybe look at having a broad network of people we could look to for opinions, and not necessarily the banker, not the person who's selling you the equipment, but people that are just looking at markets and understanding how these things all work, and trying to give you decent advice and try to make your business successful. And that's the other thing that these guys said about the 80s was they were running their farm as if it was a lifestyle or it was their thing that they did, and not running it as a business. And they said that was what buried a couple of them. Run your farm as a business, and I'll catch you guys next time.
Thank you for listening to the Agronomist podcast. Be sure to check out our website, stallagronomy.com, and our other social media for more information and other episodes.